If you are looking for a high dividend stock that also has growth potential, then British American Tobacco might be for you. The ticker BTI. The stock offers a high dividend yield of about 8%, but also seems to be undervalued. Current price is 37 and the fair value estimate from Morningstar is $50. It should be noted that the fashion trend is negative, but the current economic trend is still strong. In other words, a company with competitive advantages. Therefore, it also receives a 4-star rating from Morningstar. And the analysts on Wall Street, although there are not many, give an average price target that is around the current price level. And we will see that British American Tobacco also has long-term potential. First of all, the historical valuation. It is, of course, a company that does not really operate in a favored sector, and it is precisely in hated sectors and industries that you find the most value opportunities. However you look at it, at this moment, based on historical valuation, the stock seems slightly undervalued. Also, in the shorter term, over the past 7 years, considering the EPS development, the company appears to have interesting price potential. If you purely look at the estimates, then British American Tobacco should receive a price earnings of 15 based on the very limited EPS growth. However, let's assume the normal multiple, which seems more realistic to me, and the 5-year normal multiple is at 8. Looking at history, it has been somewhat higher in the past, but nowadays, the long-term potential for tobacco companies seems to be somewhat limited. If we consider the standards, if we maintain a multiple of 8, given the current EPS growth, which is a very limited slight small growth, then the stock could achieve a reasonably attractive average element over a 2-year period of 14%, of which 8% is dividend. If we look at the valuation of British Tobacco, we see that at this moment the stock is relatively cheap, especially compared to the sector median. However, the sector median is not very comparable to this company. The price to earnings for the following year is estimated at 8.6. The price to sales is not super low, but seems okay, especially because the company generates relatively a lot of cash. It is truly a first-class cash cow. The dividend yield is 8%. That has been very high for many years. It does have quite a bit of debt, so pay attention to the debt ratio for this company. Growth is also not really impressive. EBITDA growth for next year is estimated at 2%. The EPS growth is not even provided as an estimate. As I said, no one really wants to sell this company as an analyst. That is precisely where the opportunities lie, because objectively speaking, the company simply has interesting margins. Looking at the dividend safety, it is not super impressive. Only the dividend yield is very high at 8%. And also, when we look at dividend growth, which is not interesting, nevertheless, they have been paying dividends for 13 consecutive years. And that is a relatively high dividend as well. So as a high dividend stock, there seem to be opportunities here. And it is of course your task to analyze what the downside potential risks are. Looking at the short term, the Zexshenk gives a hold. Looking at the technical analysis aspects, we see that after a significant drop in 2004 and 2020, the stock has already risen significantly by about 25%. If there is a long-term potential for this company, it means that over an extended period, the company is expected to grow and perform well in its industry. This potential growth could lead to an increase in the company's stock price, which might happen relatively quickly within a short time frame once the market recognizes this potential. Additionally, investors in this company can benefit from an annual dividend yield of 8%, which is a return on investment paid out to shareholders. This dividend yield is considered attractive, especially when compared to other investment opportunities, as it provides a steady income stream while also allowing for the possibility of capital appreciation as the stock price rises. So all in all, British American Tobacco seems quite interesting, but it depends on what you think of the ethical aspects of this company and also of course the potential downside risk of this company, which operates in a not so favored industry that can be blocked by the government at any moment. Whether that will really happen in the short term, no idea. But that's why I personally do not invest in British American Tobacco. I cannot accurately assess the long-term potential of this company, however, purely based on statistics. And if you look at the factor analysis with quant ratings, it is a strong buy at the moment due to a very low valuation combined with strong profitability, good momentum, and EPS revisions for which the expectation is that they will make more profit, at least in the short term of 6 to 12 months,